for tax year 2014. So they paid him interest from April 15th of 2015 until they processed the return, which was $1,100. Not all CPAs are created equal, because when I reviewed his return, it was done by another CPA who I actually happen to know, and I don't know if he just has so much volume that he doesn't take the time to look, but it was a simple tax rule that he could have applied to save the client $92,000 of taxable income, which equated $27,000 or $26,000 for the feds and about $12,000 for the state. He hasn't got the state check yet, but I'm sure he'll send me that picture too. So just so you know, it's about knowing the tax law and educating yourself to help minimize your taxes. The second one is an information sheet on meals and entertainment. So everybody likes to go out. Everybody wants a tax deduction. So what is a meals and entertainment? How does that really qualify on my tax return as an expense? And this even goes for you, Tanisha, somebody who's not self-employed but is in sales and is taking clients out. You could write this off on your Schedule A 2106, non-reimbursed employee expenses. The key here is it needs to be ordinary and reasonable. So the expense needs to be ordinary and reasonable for your profession, for your job. So as an accountant, taking out clients, potential clients, to dinner is ordinary and reasonable. The example I always give, what is ordinary and reasonable, is you're making $10,000 a year, you inherit money separately out of your business, you go to Huntington Harbor, buy a $100,000 yacht, and write it off on your $10,000 tax return. That is not ordinary and reasonable for somebody making $10,000. Now you're making $1 million a year. I'm gonna pick on Cheryl. Other real estate agents have yachts in the harbor, showing clients, entertaining clients on their yacht. Well, now it's ordinary and reasonable for somebody making $1 million to have that yacht. There is a lot of gray room, and that's always going to be an audit issue. If it's not really ordinary and reasonable, you're taking a gamble per se on that.
Getting on.
Jill, I had one. No more. Money tip.
Yes, it is. The other thing about your meals and entertainment are if during an audit, the IRS were to come and look at your return and say you had put meals and entertainment in travel by mistake, you only are able to deduct 50% of your meals and entertainment. So that would result in a tax liability, whereas if you wrote off the whole $1,000 in travel, the IRS moves it to meals and entertainment, you don't get to write off the whole $1,000. You're only writing off $500. So even though you might be going out to dinner, you're only writing off 50% of that on your tax return. So remember that. Give a bigger tip. Also, there's a key, not a key thing, but at the very end, it says for expenses of $75 or more, the receipt is required. So for $75 or less, you really don't need the receipt, but I'm going to recommend that you have it and keep it. It's very easy to just get a banker's box, put 2016 on it, and throw all your receipts in the box. The other thing on here they talk about is the amount spent, the time and place. Well, that's going to be on your receipt, so it's easy to keep that. The business purpose, so on your receipt, right, I had lunch with Jason. We talked about starting at my website and my services to him. It doesn't need to be a book, just something simple. What you talked about, how you're planning to get revenue out of this. During an audit, the IRS agent told me, I had a client who wrote off a trip to Hawaii. And for them to allow that expense, he was looking for a contract signed, something more substantial, that he went and saw a client instead of just a whole trip to Hawaii. Now, because Hawaii is a vacation destination, he understood, he wanted more information, more proof that that was a legitimate expense. But if you're going down to San Diego, especially from here, it's very easy to write that off without needing as much expense, because that's not as a big vacation destination like a Hawaii trip is. And you can put the business relationship of the individual involved, but as long as you know the name, the business purpose, you're going to be fine. And again, you don't have to put it in this nice, pretty binder. Just throw it in the box. If you ever get audited, you know it's there. But the key is it's ordinary and reasonable, and you only get to deduct 50%. And just for the record, I can't save everybody, get them a $27,000 check. It depends. But I was kind of happy that I got that, and then to get the check, it was nice to see that it came through. So I'm going to go on to my question and answers. My background education. Before I was a CPA, well, I was just a twinkle in my father's eye. No, I'm just kidding. Before I was a CPA, I actually worked at Boeing for a couple years out of college. I took the CPA exam as a backup in case I got laid off in aerospace. I passed the exam and I had to make a decision, do I get my CPA or MBA? I always figured I could go back later and get an MBA, so I went ahead and got my CPA license. It says, when do you prepare for next year's taxes? Well, you're always preparing for next year's taxes. You're trying to keep up on your books, knowing your income and expenses, what's going on. My job is to help you and educate you and keep you up to date on the tax law changes, so you don't have to. That's my job. But some of the best year-end expenses are, if you know your income's higher and you have the cash and you're going to buy a computer next year, well, buy it this year. If you're renting an office space, instead of writing the check in 2017, write the check in 2016. Get the expenses now for money you're going to spend anyways. I don't know if this was a legitimate question, but it's funny, so I'm going to answer it. Were you a male model? And it's not a male plane, it's a male model. No. Do you help with selling tax debt? I have helped people with offer and compromise, OICs. The main thing with the IRS is if they think you could pay it and you're having income, they're going to reject it and make you pay it and put you on a payment plan versus trying to sell it for 20 cents on the dollar. So a lot of the commercials you hear, they may work, but they're also charging you a lot of fees to pay for that advertisement. But they may not work too, but you still have to pay out of pocket. Then the last question is, craziest thing I've ever done. I don't know what constitutes that, but it really is nothing. The funnest thing I did was I scuba dove in Cabo San Lucas and got to see an underwater waterfall, which is the sand falling underwater down a cliff. So that was, we're at 120 feet down, so that was really cool to see an underwater waterfall.
Or sandfall.
Underwater sandfall. That's what it's called, an underwater waterfall.
And it's always like that? It's just continuously?
Because the slope is so steep, as the waves push sand on top of it, it just runs down. And then it's a sheer cliff at the bottom, and then it just drops down to the canyon down below. And it's really clear there. So it's really
See, my
cool.
question was good.
That's your
That and the male model.
and the male model. I was pushing you to ask some questions.
Male model right there.
I asked him,
It
he
looks
said
like,
no.
it. I mean, he has a kind of like the sharp chin.
No, crazy, I was thinking like, you know, like college days. But you sound like a bookworm.
I'm married with children.
It's on video.
I have a legitimate question. So, are you the only person that can show your taxes? And you might know this too, but like Donald Trump not showing his taxes, there's no way the government can make the IRS turn over taxes, so your taxes are that secure.
Yeah.
No one can see
In
them
theory.
but you.
Yes. Donald Trump not showing them was weird because all the other politicians want that honesty and shows it. But he didn't.
Probably hasn't filed yet.
Well,
You might want to help him.
Actually,
I don't want to help him.
I have a similar question though too. So, like when you're doing like the mortgage, the home loan, all that stuff. So, do they have access to your taxes, or it's only what you show them?
When you're going through the mortgage process, and Jan could tell you or Cheryl could tell you, and you're signing all these papers in escrow, you're going to sign a 4565, I think it is.
4506.
4506, a request for your transcripts. So you're giving the mortgage lender the right to request your tax returns from the IRS.
Oh, wow.
The tidbit of information is that shouldn't be blank, meaning you need to put how many years you want them to have access. So it should be for 2016 or 2017, but you don't want to leave it blank because you don't want them going back forever.
We typically need the
in
last
the
2
future.
years.
Oh, interesting.
We'll
So
put
you
in there
authorize them to go and check it.
But yeah, but you have to sign to authorize them to go get it.
It won't be blank.
Otherwise, you can't do it.
Yeah.
Like, they can't do it.
Yeah.
Let's say forward your name.
One interesting thing, when you write off your meals and entertainment, they'll only give you 50%, but when mortgage people look at your income, they're gonna deduct the whole thing from your income rather than just 50%.
So in qualifying for a loan, you deduct
Yeah, they
all
actually
100%?
spent, yeah, they actually spent 1,000, not 500, so
increases
we're
my
deducting
income.
1,000.
Oh, you're deducting 1,000. Oh, I thought it went the other way. I did to add it back to my income.
Yeah, that's the difference between the tax returns and what the underwriter's gonna look at, because it's money you spent.
Since we're on the subject, I know Cheryl knows this, but most of you, if you're refining, gonna be buying a house, everybody's main purpose is tax minimization, write off as much as we can to save taxes. Well, if you're gonna be buying a house, that doesn't help you qualify to purchase a house. So you need to be in contact and know basically 2 years in advance, really a year and a half, because you could kind of help. But you need to talk to Jan so you know how much you qualify for, so you can make sure your income's that high to qualify for that.
But you could also hide money in your own 401k, which is what I did, not hide money, put money aside in the 401k to reduce your
Taxable income.
taxable income, yet you still qualify for the mortgage. So that's like the green.
We'll use the 401k as income, but the but IRS will, they'll deduct.
So since we're on the subject, if you were to put $10,000 into a 401k, let me back up. If you have $10,000 of income and you're deciding whether I should put it in a 401k or just pay the taxes on it, assuming you're in the 25% tax bracket, you're going to owe $2,500 on that $10,000. So if you put it into a 401k, you're going to save instead of paying the IRS that $2,500, you're actually paying yourself the $2,500, and you're matching it with $7,500 additional cash. So you're really getting a rate of return on your own investment. So you're putting in $7,500 and you're really putting in $10,000 because you would have had to pay the IRS that $2,500 anyways.
But you'll have to pay up later, right?
Well, when you take it out, but that's besides the point. If you're doing that, pay yourself. The key of this is you're paying the $2,500 anyways. You might as well put it in your pocket and not their pocket.
Well, by the time you take it out, the taxes won't be, there might not even be taxes for the work we're
Yeah, we don't know. And usually when you're retired, your income's lower, so you're taxed at a lower tax rate, in theory.
In theory.
Any other questions before we gotta go? So I'm just that good.
You're amazing.
Thank you.
Thank you very much.